Good morning, good afternoon, good evening to you all. Welcome to today's session. My aim here is to align our thoughts to what will be the possible overall direction of the market, the immediate, the intermediate, and the overall direction of the market. And there are a couple of what I want us to see and understand here. When we give our opinion here, because it's whatever I do, it's my opinion, and you too, you have to look at it and digest if you agree with it or not. The opinion that we give, it's more or less 70 to 80% of what market is most likely going to do. We look at this market with alternatives. If the market does not do this, what is it going to do? Is it going to go bearish? Is it going to go bullish? Is it going to consolidate? And when market is consolidating, you must know what market is trying to do consolidating. And there will be eventual direction of the market. Forex is such that will teach you patience. And that patience is learned during consolidation. Now we have this consolidation, we experience it on different time frames, from the smaller to the intermediate and the larger time frames. We experience consolidation. Between here and here, what we've been seeing is consolidation on the larger time frame. But here, in between here, is a consolidation on the intermediate time frame. Likewise, here, likewise, here now, we are seeing consolidation. And how to read the mood of the market, when it comes to candle, you have to dissect the candle, on the time frames you are looking at it to tell what is this candle telling me on this time frame. Candles on consolidation time frames does not speak much because you have to look at the larger time frame. So this is the weekly so far. What we've been seeing, there has not been a real movement from the dollar losing its strength and from all the other majors gaining strength against dollar. We expect a drop, and we are not seeing that. Is it possible for this to break this top again and break this top again? 100% it is possible. We are not calling that for now, so we have to know that. So in you trying to pick your entry, you must guide with stop loss. You must know at what point will the dynamic change for you in the direction that you're not inclined. When you are inclined in a particular direction, it means that overall, you have told yourself, this is the way I think the price wants to go. And in case the price is going to go against my line of inclination, I must guide myself. And that's what it's all about. I want us to take a look at those points where price changes structure or changes direction or trend. What and what did we observe? And here it's a major change of trend. And this is weekly candle, mind you. And this is a US dollar index. And this is the first week. It took like 6 weeks before we saw this big move to the downside. So, and there is a major move to the downside on this higher time frame. So it took us about 6 weeks. If you count 1, 2, 3, 4, 5, 6. The 7th week was when we saw a major movement to the downside. And this was a major consolidation here, or a bigger consolidation to move the price to where we had it here. We are going to look at those tops also. Here, also we see another consolidation, a lesser consolidation, because you expect it to be lesser than this. A lesser consolidation that took about 4 or 5 weeks before it moved. We attain the top here, 1, 2, 3, 4. The 5th week, you know, the 5th, the 6th, and the 7th, we were going down. Now here also, we are seeing consolidation. This is the first one, the second, the third, and the 4th week in a row. We are yet to move. When we look at the area or potential area of changing trend, you have to be careful that this consolidation, where is it going to? You must know that if the price actually has a prevalence to go in the direction of where you think it's going to go, there are certain things that price must do and must not do. You don't expect price to come back and break the 88 or 90 of its movement or the old movement if you are going to go, if it's retracing against your line of thought. So what I'm trying to say is that this thing can still go up and break the top about 20% or 30%, and it can move as we are taught, to the downside. That's like 70 to 80%. One of the things we have to consider also is, do we have the structure in place to tell us that, oh, the structure is completed to favor our movement as desired? If it's not completed to favor our movement, then it's telling us that it's going to move against us. Now, this is the first structure after the big move of the A wave, A, B, C of B wave, and a C wave, which is like A, B, and a C. That structure is completed on this time frame. That's number one. That tells us, the structure tells us that now it's ready to go down. We will only be ready to go down and confirm that we are coming down once we break this low. Now, this is the first move that tells us we are coming down. Then we have to look at the move that tells us that we are coming down, and we have to look at reactions that followed that move. For instance, this is a move and it's an impulse on that larger time frame. All these occurring, they are corrective on this time frame. They are corrective reactions to this first move, initial move. And the last move, of course, of a C, we expect to be an impulse, which is correct. That this is correct to be an impulse of C, and this an A, and correctively B has to be like this. That has confirmed that these 1, 2, 3, all these reactions that's taken so much time, they're actually corrective to this wave, to the downside. Now, if this is C, after a C, there has to be an impulse in 5 waves. We have to see the beginning of a move in the direction that you want also has to be a 5-wave structure and an impulse too. So we see that it moved 1, 2, 3, 4, 5. This is an impulse, a corrective, small impulse in comparison, and it is 5 waves. And having said that, then we have to look also at the new move that we are seeing, which is a reaction to this. We saw the first move of A, and in here we saw something that looks like an ABC on the lower time frame, and this move to the upside here. So we have seen this as A, B, and a C. And these are reactions. With all of that, they are not broken the top of here. Means that A single move, a corrective move is what this one has told us. So it's still in line, but that we are ready to move and come to the downside, we now need to break this. Once we break this point, then we are coming down. On the larger time frame, on the monthly, we are breaking here, but we need to get out of here first and take care of our business here. Then when you now come to this point, when are we going to be ready to move? We need to break the weekly support. And that weekly support is here at this point. We need to break at that point. We are yet to break that weekly support. We need price to move and for us to see what kind of reaction are we going to get here. So the kind of reactions that we get here will now tell us that, okay, we are likely going to go up and break the top, or we are coming down. And that's what I'm going to probably expose now. The structure on the US dollar index and the DXY now looks familiar or almost the same, because we are coming bearish. On the US dollar index, it has moved further down, but on DXY, it's yet to, come and break. So we need to take this support here on 103,900 or thereabouts. We need to take that out. And if we go to euro dollar, I'm going to begin to dig deeper on the euro dollar, because that's what we trade. So we can see we need to take the price also out here. And that is what we are aiming. We need to knock off 1.08900. We need to knock that off. So once we knock that off, then we know that we are going up. But for now, this is also highly corrective. Just like I said, here, at the base here, and at the point we had this is clearly a 5 waves. So everything is still pointing to the fact that we should go up. But in our go up, we need to take this weekly resistance here first, then followed by this resistance, and this will be the next one. These are points that we have to break and see the kind of reaction we get for us to, correct, if we are going to have that. Otherwise, the price may just take this as the movement here as an A, B, and a C to the upside. So we must look at that's the alternative now, that the price will take this as an A and a B and a C to the upside. If that is going to happen, then you will be expecting at least maybe a running flat. If you do the fib ratio, maybe a running flat or an extended flat. If this goes beyond a retracement of below 161.8 or at 161.8, then it's going to be an extended flat. But I think most likely it might just fall within the premise of a running flat. So if it's going to fall within the premise of a running flat, it should get here at least. And so when we now see that reaction here, then probably it's going to be an impulse to the downside. That is when you now suspect that, yes, we most likely might break the bottom one more time. But looking at the kind of structure we have here after this one, if you consider, I'm not calling this move, I'm not calling it. I'm saying that we are still going to go up and break here and break here, that this is the end of the move to the downside here. But we have to look at the alternative. That's what I'm saying, that in case that will not be that we are coming to break this resistance and this resistance and this resistance, and we are still going to break the bottom one more time, then we have to consider that this is the first move down here, and this is an A, B, then we are seeing a C leg, and a C leg at least should touch here. We should kiss at that. So no matter how what you want to see, we must still come to this point and react here, and you can think of probably closing your order at this point in case of what kind of reaction that you see if you're going to come down. And again, it might just begin to drag and we might just complete. And I will see it on a small time frame. We might just complete the first set of broccoli on the intermediate time frame to complete that broccoli, have a correction of a 2-wave before we go further up. So we're going to see all of that possibility. But for now, I see, if you see this as an alternative, an A, this is almost at about 1, 2, 3, and then we should be expecting a running flat, which should get here. Otherwise, what we are pitching is that this is a corrective. It looks corrective, but this is a wave 1, a wave 2 of the beginning of a trend of change, a trend change for us to go further up and break all these tops. 1, 2, and 3. And the last one, once we break this one, the last one is to break this. Then we are going to get a bigger structure again. That means we are on the run to do this leg, a complete leg to the upper, other side. So we are still in the process. So now we are going to see it's very corrective. So even the candle formation and closure, looks highly corrective because we have not even gotten a momentum candle so far. And this one is looking like, oh, the wick is going to end in a doji. So, but we're going to look at whatever this is. Of course, it can end like this, and again, boom, it goes up. So let's look at the daily time frame. Now, looking at the day time frame, because if you consider this last wave here, this is like a clear 5 waves to the downside, and every last wave of the move, of course, has to be impulsive before you have a change and of a trend or character. We must know that. What are the waves that you expect to be impulsive? Wave 1 will be impulsive, wave 2 will be impulsive. I'm sorry, wave 1 will be impulsive, wave 3 will be impulsive, and wave 5 will be impulsive. So it doesn't really matter. This can still be like what we are saying. Now, on the weekly time frame, what I said was that these might just be an A and ABC of a B in case that is the alternative now. And these might just be the last C. Even the last C, if it's going to be a C, we expect it to be an impulse. So at some point, this move is going to give us an impulse. Even if we are coming down, either we are coming down or we are going up, we still need an impulse here. We're not getting it. And so if this is highly corrective as it's looking, like I said, we still need to get the last part of it to be an impulse. And that last part will decide if indeed we are in a new wave and a new trend, or we are going corrective to go down again and break the bottom. So that's what I'm saying. But on the larger time frame analysis, we know that this should be heading up. Break this, and ultimately break this, and ultimately break this. That is what we are saying. This is corrective as an A, and an a B, A, B, C of a B, and the last C, this is the way it has given us, which is the 5th wave to the downside. So we all know, you can see at this base, when the price is turning up, you can see how corrective it was before we had this big move. So the wave 3 of those moves, that is where we are expecting some big move to occur, and that would change the character of whatever we are trying to see here. Now, how do we proceed? We proceed to know what is happening here. For now, we are not coming down here to break this. We should push up if we are going to go up. We should not come here for now. That means price should not break 1.06500 for now. Now, that is what we are saying, because in terms of what we're looking at the daily here, we see this move and a correction here, some, stupid correction of a 2 here, and a 2, a 1 and a 2, probably a 3, a 4, a 5, to have finished the first move of a broccoli here. Then we now see a corrective format to the downside also, an A, B, C of a 2. So we have a primary 2, we have an intermediate 2 here. So a 1, intermediate 2, and sorry, a primary 2, a primary 1, a primary 2 here, intermediate 1 here, intermediate 2 here. So we are still going to go a bit bigger to finish this as a wave 3, a wave 4, a wave 5. To finish, at that point, we should really have completed what looks like an higher time frame 1. Then we're going to come down and have a 2, an ABC of a 2, before we now have a big rally to the upside. That's what we are saying. So we have to carefully look at that. That is what I'm pitching here. That's what you transfer to your DXY as well as your US dollar index. That's on the daily. So if we go more on the 4-hour time frame, again, like I said, this is the first move, a primary 1, a primary 2, and a 3, a 4, and a 5 here. So that has finished an intermediate 1, and ABC intermediate 2. Intermediate 1, intermediate 2, a primary 1, a primary 2. So we are having a bigger 1 to finish. So we need to finish as a bigger 1. And if you're going to finish as a bigger 1, we need this to actually grow to what becomes like, looks like a 161.8. If it's not an ABC, it has to be a 161.8. In between the primary here, the extension actually to get to 3 actually clicked 161.8. To intermediate 3 also clicked 161.8 for us to have a 5, here, here, and here. Then we are coming down. So these, I think, reacted at about 61.8. It was deeper on some other instrument, but about 61.8. Then we have this move. Supposedly going to be a wave 3. This might just be a primary 1 of 3, a primary 2 of 3, and a 3, 3, a 4. Then, sorry, we might have finished a 4 and a 5 here, of the primary. So the first wave of a 3 may have finished here. We are seeing this most likely to be a wave 2 of a 3. So, and this wave 2 of a 3, usually you look at the primary. If you are buying, you're going to look at the primary support that guides the price, that the price should not break those primary support, make key state. Price does that oftentimes. Look at it. I'm just trying to show us something here. I want you to pay attention. Now, the price went up to give us the micro 1 here and a primary, sorry, a micro 1 and a, sorry, okay, this one's a 4 and a 5 here. So the first was the move here, and this is the primary 2 here. Price never came back there. So we had the move, and to complete an intermediate 1 or thereabouts, or a primary 1, then we add this move here. So price will be working against this support here. Then we had this lift to the upside, and price gave us this correction, is working against it. So it's setting itself against this place. So price go up, went up and did this. So this is another place that the price, we don't expect price to break. And as I said, 1.06500 here. So we don't expect. Now in the move of a wave 3, the first portion of the wave 3, we have this move, and this is a primary 2 of that 3 here. So price is not even expected to break 1.06700. It may case around that area. So that's what we are saying. So price will also always give us a clue to a reference that price may likely come towards but not break in its movement to the upside. Now, this is moving to the upside, and it's turning out to be a bigger correction here. Is it a 2? Because we expect a 2. If this one has completed, we expect a 2. So, and it's looking like a 2. Are we done with this? With this a 2? Are we going up? And that is one question we need to answer. Price may just do a pullback, or price may choose to do a lower time frame correction to the opposing side before moving. And if they now decide to make it bigger, then to be looking like, oh, the price wants to do a 4-hour correction. So, and so far, we first had this move to the downside, and this went up like an A, B, and a C. So this is a lower time frame correction here, which may have finished this correction in its entirety. So if price now decide to make it a bigger correction, which is 4-hour correction, so this will turn out to be a 1-hour correction and to give us a 4-hour price action. So if these had finished here, then we need this to break the top and break it above in a retracement beyond 161.8. Because if price still, works within 88, 76, 61, retracement to the upside, it still gives us a possibility of, coming to break the bottom, and that would be a zigzag to the downside. If it's working at the 90, it can be a regular flat to the downside, which might still take the bottom. So both cases might take the bottom irregular, and as well as the zigzag might still take the bottom if it's reacting at that premise. And if it goes up and reacts at an extension of 123.6, then we should be expecting price to walk down again and react at about a retracement of 61.8 or 76 as a running flat for further upside. And if price reacts exactly at an extension of, if you take this one as an A and this one goes to a B at 161.8, then we should be expecting what? An extended flat that will still come down and take the bottom. So regular flat, zigzag, extended flat, is still possible to take this bottom. So if you are seeing it, we don't know what the price is going to print. We are looking at it and we are trying to dissect. But for now, this may just be the end of this correction. So as a 2. And if you look at it, I think it takes from here, you take your fib and you take it, I think it's up to that. So let's go to 1 hour. I'm talking too much, but at the same time, I'm trying to help us see. So let's see. Now, this is the new move now. This is the new fib that you're going to take, not from here. All these ones are done. All these ones are done. All these ones are done. So what are we done right from this bottom to where we had corrected? If you take it up to this point, price are done beyond 50, which is good and enough for a wave 2 in that regard. So price may be going up. That's what I was saying. But if price wants to still go down, the more we need to see reactions. We need to take this point first. This where the price are set here. We need to take this point to the downside first. And when we are seeing that break this also here, then there's a potential that price may be going down. But for now, we are almost at 76, and this is about 90. So we still have the possibility of price coming down to make this a larger correction than what we had seen. We have not seen a real reaction, and price, if it goes up, like I said, you have to look, okay, what kind of extension is price and what kind of reaction are we getting? Are we still coming down to take? So there's still possibility of this to go into a much bigger correction and to come down before it goes up. But for now, if you have your entry here or lower down, good to go. Just continue to watch what price is doing. Now, what will now set the mood for us on the larger time frame is to now see this one as a complete intermediate 1 and a 2. Then we need to see a push, because the movement from here in terms of reaction of extension to the upside has gone beyond 100. It has gone beyond 100. So it has gone beyond 100, and we are seeing a correction, means that price is still going to push up beyond 100, and this is a correction. Price is not going to come down now and take the bottom. So it's going to push up with this correction that we are seeing. So, and this is 1, 2, 3 here. In terms of here, I'm not talking in terms of here. In terms of here as an A, A 1, 2, 3 may just be, let's say, where 1, 2, 3 is going to be. You must begin to know how to do your analysis on the lower time frame and the higher time frame. On this time frame, okay, the 1, 2, 3 almost even coincide of this extension, almost coincide with 1, 2, 3 of yellow, which is where we have these and these, 1 and a 2. So it might just react there or not. So, but a 161.8 of that is around here before it's going to break above here. It's not going to tick here. So you look at all those possibilities as price is printing. So there's nothing that is like a fixed box. You don't fix your mind, get your mind fixated because you are numbering and you are trying to label. So if you are labeling, you must label with, with that in mind, that things can change around your labeling. And if it's going to change, you know how it's going to change. And that's how dynamic it can be. And that's how also your entry, your take profit point, your stop loss can change also based on what is unfolding in terms of structure that you are seeing. I'm wasting more time now. So we need to also take this out as a trend, resistance, and price is still reacting in that frame of, trend resistance. And we need to see what price is going to do. So on a larger time frame, if this one is going to be completed, we need to get here. It will still be an ABC correction if price begin to go down and react, to break structure to the downside. Then it will now be an ABC and a not 1, 1, 2, 3 as we are trying to, prepare our mind. And this is 161.8 extension. So we need to see how price will take this. If eventually we do go up, we want to see how far price is going to take this. Once this is knocked out of the path, then it tells us that we are in a new trend. We need to knock this area off as an extension of 161.8 to the upside. Then we are almost there. And if we're going to see an ABC, just like I said the other time, that we are going to see this as an A, this one as a C, then for us to move to the downside, we are going to see that we're going to react not beyond this level. They will be coming down. So, but these are transition zones, and this is what we expect to happen within when you are going to change trend again to move to the higher, it will look corrective, highly corrective. For how many weeks now? 1, 2, 3. This is the 4th week, and we are entering the 5th week. The 5th week to the 6th week might be where we're going to see either a major break to the upside or a reaction for us to now begin to go to sell. A sell-off. It's going to be a sell-off, a break to the upside. So that ends that. Now, the same thing you're going to get on, because the DXY, sheds light on movement. So USD, NZD, USD, we are expecting the same thing, almost the same thing to happen here. The move and an A, probably the second wave here. Then we are seeing the growth of the 3rd wave, and where we need to break also, if we bring out our drawing tools. So this is like a 1, and this is like a 2 here. Then we need to see how we climb up. We are trying to see this as the inner structure of a wave 3, and this as a 2 of 3 is still very shallow. So that's one thing, it's still very shallow. There's a possibility that this may turn down to break the bottom. So if it's going to come and break the bottom now, you don't want to buy from here. If it breaks up, let's see, let it go up now, correct more deep again for you to catch your entry. But in case they begin to break straight to the downside, then look for where to enter again around this point. If that happens, this is still within reaction of a zigzag, or a regular flat to the downside. The correction is really not deep. Let's see. The correction is really not deep. The correction, it's barely reacting at 38 and looking at as if behaving as is a 4th wave. So that's what is behaving as a fourth wave, as a second wave here and a fourth wave. And we might just go up and have a fifth wave and come down to do a big move correction to the downside. It's anything is possible, except it breaks beyond an extension to the upside from here to here for more than 161.8, then we are going up further. So that's what you can see here. On USDJPY, what do we have there? We had seen an initial reaction. This may have completed a wave A, B, C, and this might be a one of the fifth wave to the upside last on a larger time frame, like I said. But we need to correct deep for this to give us a wave two and a two. And if we're not going up, we look at the potential of this being an A, B, C, or a 1, 2, 3 to finish up. Let me go bigger now. So let me go bigger. So what we're saying is that it can be an A, B, C here. And this also can grow to be an A, B, and a C to break down. So that's the alternative, you know. A, B, C of A, and a B, and a C to break down. But this does not look like that. It's looking more like the first wave one and a wave two. If it does not take the low, a wave two and a wave three, probably a wave four, a wave five, then we turn down eventually. And that's when we expect the yen to be rallying. If we turn to the JXY, let's look at what we have on JXY to guide us. You have to look at that JXY to guide you in this trade. So on the JXY, we are still where we are. On the JXY, if you look at it, we say this is like a 1 and a 2 and a 3. And this might just be, we've not gone beyond, we have not broken 1 here. So this still looks like a 4 here. And this coming to the downside may now be as if we are trying to do a wave 5. And if it's a wave 5, we have taken this now properly, we have broken the trend, this trend to the downside. This trend supported downside. So this one is coming down. We need to take this also trend support here. The price may correct deeper without breaking the top to make it a wave 2 of 5, which is the last 5. Then we come down as a wave 3 and a wave 4. We may just still eventually come here to finish this completely as a wave 5 before a big move to the upside. So anything is possible. So our line of reaction is between here and here now for this Japanese. So Japanese yen, this still looks good as like a wave 4, and then we're going to do a wave 5, though it's gone up like an impulse, like a 5-wave impulse. But the way this one is coming down would suggest what you need to do here as it's coming down, because this looks like an impulse, looking as if this is a 4 and a 5 here. And if it's an impulse, what we have to do first is to see how price will react around here. If this is the first impulse, so you have to turn to this. This reacts actually very late, unlike USDJPY. So what we need to see is the action of price around this area. This is 85. That way, we are looking at this as a big impulse, okay? So price should not break here in case we are going up. This has been corrective. We must know that this has been corrective. So if price does not take the low here and price gives another impulse, it means that we are in a new wave and price is going up. I'm going to take this top here. So we need to pay attention to that as we are trying to react. So this is, corrective. It's corrective. It doesn't really look like a wave 1. It looks like a wave 2 in terms of correction for us to have this impulse. We haven't said that anything is possible. It can be as corrective as this and continue to go down and break the bottom one more time. So we must know that this has pulled so deep now that within this frame, it has pulled so deep that's pulled beyond 161.8 here. It's almost getting to 76 and 78. So we must, within the first 2-3 days, we must look and check your JSY as you are also checking your USD JPY. So you must be able to check all of that as we are trying to navigate now. So anything is possible. So the two will tell you the eventual direction of this move. We might be having two. Once we don't take the bottom again, I'd close my trade here, to the upside. I want it to correct deep again because I don't want to lose my gain. I join from here, I close it around this area. So I want it to come down, and see the kind of reaction before I ride it to the top again. Otherwise, we might be having a big A, B, and a C to the downside. Now on gold, it's fine. On gold, yeah, gold seems to be breaking to the upside. I think gold might not be testing the lows that I expect it to test. I think it may have ended is an A, B, and a C here. So it may be doing a 1 and a 2, and this one pushing like a 3 to the upside. So we need to see this movement break beyond 161.8 to the upside to confirm that once we have a break of 161.8 to the upside, then we have the fifth wave, the fourth and the fifth wave, then look for a correction of ABC to ride up. So that's what, if I take that to the lower time frame, as this is, how do I help us here now? Let me see how I help us here so that you understand what I'm trying to say. As this is the new low, let me bring out a drawing on this daily time frame. So this is the new low. So I will be using, let me change this to purple, so that by the time I go there, you understand. Let me change that to the purple. So purple, 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 and another purple. Okay. I really want you to catch something here. So let's go to 1 hour or 4 hour time frame. So coming inside of 1 hour time frame, there's like a primary 2 here, which is the ultimate area you don't want price to come and break now. So this is seen as a 1. That is seen as a 1. And this is taken as a 2 for now. That's where the correction stalled. And in terms of a deep correction, yeah, it's like a 50. So which is good for a wave. A wave 2, a 1, and a 2 here. So, and probably we're going to see a wave 3, a 4, and a 5, and a deep pullback, which we're going to join to ride up again. So that is what you can do here. But let's see. But the price must break the structure of that impulse before you now look for correction. These are the mistakes that people make. They think they can join trade. It has to lead first before you join it. So price had broken 100, it has broken 127 self. So what we need now is at least price to react above or at exactly around this level. This is 161.8. Price needs to react around 23.92 area, this area. So at this point, once we see reaction, this might just be the third wave of the three, and 3.3 might just 3.5 might just knock here, and we might see a big reaction. So once we begin to break the structure to the downside and break this structure to the downside, that's when you now be getting ready to plot your ABC to go up. So that's what we are saying on gold. So these has to be taken. Anything below here, I don't want to look for my buy. Anything below this line, I don't want to look for my buy. Again, I'm saying it. Anything below this line, I don't want to look for my buy. I want price to kiss here or break it, then react to break structure to the downside. Then break it to the downside, I will be looking for my ABC correction, at least without breaking this low, before I join it up again. So with that, I've come to the end of today's long section with an happy, do like, shares, and if you like what I'm doing, and an happy trading week. Bye.